All right, so this is a very interesting bit of price action right here on this chart, ladies and gents, because Bitcoin has managed to bounce off that $56,000 price area where there's basically no support, and we've come right back up into a critical range on this chart. And there is a lot of celebration going on right now for this price action right now. A lot of people are actually quite happy with what we're seeing here. There's a lot of FOMO longs going on in the market right now and stuff like that. I want to tell you why I'm not hyped up for this, right? A lot of people make the extremely dangerous mistake in this market of getting very fucking bullish at resistance and getting very bearish at support. And this is something that I've definitely been trying to help you guys correct in your own trading if you suffer from these kind of things as well. And it's just, it's just how the markets work, right? Like if you've been watching the market tumble lower for a couple of days or weeks or whatever, it's going to start grinding down on you. And, because you're a human, you're going to start to become bearish at the bottom. You're going to start to become bullish at the top. This shit is normal. It's not something to be too ashamed of, but on this YouTube channel, we're tackling stuff like this head on. And the first thing that we need to understand is that the S&P 500 had a really big open today. Okay, we're on the 1 hour right here for the S&P 500. This was Thursday's trading session where it ended. Friday's trading session opened significantly higher, which means that the S&P 500 continues its upward rally since it finished this 5% correction here, 6% correction here. I still believe the S&P 500 is going to continue to drop down. And again, I'll tell you more about all of this stuff as we continue on in this YouTube video, but there are a couple of things we need to anchor ourselves with, and that's why I'm talking about this. And as we're going along, do keep in mind that on BingX, linked down in the description below, you can actually trade the S&P 500. You can trade, stocks like Apple and Tesla, Forex, gold, all sorts of shit, including crypto, without KYC, and they're going to give you over $100,000 in bonuses. So that is an absolutely killer offer. You're getting a huge, huge deal right there. Definitely check that out if you are interested. The link to Bybit in the description. Also giving you up to $30,000 in completely free trading capital. And with both of these bonuses that you're going to get, any profits you generate are yours to withdraw. So if you want to get them, all you've got to do is start trading using my links, and they will credit that into your account, which is absolutely sick. So, I want to actually, show this to you guys on a completely brand new chart here, something which I haven't actually drawn on, because, one of the best things we can actually do to understand what's going on in the market right now is just kind of refresh everything. You've got your biases and stuff like that, and we don't care about that. We don't want that with this analysis right now. I want to start fresh with you all. And, the way I'm going to do that is just by kind of dropping a couple of important levels on the chart, right? And this is, a little bit subjective for us to where it should be. So actually, I think it might be more appropriate to, use horizontal levels like this. And obviously we've got just the key things that are important in this market in terms of consolidation, right? Where did this market consolidate over these last months? And, the key levels are going to be this yellow box here spanning from 41,000 up to 44, this yellow box spanning from 51 up to 52, and this yellow box spanning from 61 up to 62. Obviously, these boxes are, rough, but we're not looking for like exact stuff right here, but we can definitely see that if we trace them back, these are where important bits of price action have taken place for Bitcoin throughout its history, and we're clearly, in a situation now where we have fallen below this 60K range, and we've fallen below it by a good amount, right? By about 7%, and we're now coming back up and potentially testing it as resistance here. Now, the reason I'm pointing this out is because if we look at this with our fixed range volume profile, we've also got an extremely clear value area low on this chart, right? On this chart, the low on this line here, which is actually a very important level, by the way. I mean, you can see the point of control represented by this red line, the value area high represented by this blue line. Just take a look at the key reversals that have taken place, the consolidations, the support bounces, the rejections that have taken place along these lines, the rough support that we found along this exact level. These are important lines on the value area low here, and it lines up very nicely with where we are at right now, definitely giving us an indication that this could be a place where a lot of traders are basically going to feel like this is a fair place to start offloading some Bitcoin. And I think the reason that we're actually seeing, you guys have got to keep this in mind, right? We're all about retaining a healthy sense of perspective in this market. The reason that we're seeing a big move up here, this is a 10% bounce within 2 days. The reason this bounce is stopping here, right, and we're finally getting some consolidation, is because this is an area that a lot of people are rightfully going to be looking at shaving off some profits from their longs, maybe opening some short positions and stuff like that, and that's where a lot of people are going to be interested in the market, and for good reason, right? I mean, if you're looking at other shit coins, right? If you're looking at other coins just generally, here's Matic for an example, just kind of right back up macro resistance at 73 cents. If you're looking at Solana, everybody loves Solana. It's at resistance right now, macro resistance up at $142, a level which is not easy for Solana to break. We look at ARB, just as another example. It's at the very top of its resistance range. This is a range that a lot of people are rightfully looking for shorts. And I'm not saying that this is like the best position you could possibly take right now, but it's definitely not a bad one. And of course, if you've already loaded yourself up with free capital on these exchanges, then you might not even care because you're not even trading with your own money, and any profits you generate are still going to be yours to withdraw. But any losses doesn't matter because the exchange is paying for you to trade. So that's super, super cool. If you have already taken advantage of this kind of thing, maybe you're part of that camp, maybe that's why you're going short, because the point is that even though this might not look like a perfect setup for trades, it's still a good setup, and it's still a good place that people are rightfully going to be looking for short positions. And the reason I'm saying that is because we've really got to ask the question, is this a deviation right now, or is this price action which is actually going to stick in the market? And we're going to see, this basically turn into a back test, and then the price will continue to drop from here. That is the question that we have to ask ourselves here. And, for me, one of the things I want to draw your attention over to is what happened back here. There are stark similarities with what happened back here and what's happening right now. And it helps us answer this question of, are we looking at a deviation for Bitcoin? Let me show you guys this example right here on screen, where previously, this is, just as early as January, as recent as January of this year, so literally like 4 months ago, we saw Bitcoin collapse below its area of support down here at the $40,000 level. We had a quick drop down, we recovered back up and consolidated, and over here we had a quick drop down, we recovered back up and consolidated, and then we saw a big pump up right where this arrow is pointing to. We saw a big pump up. Bitcoin is doing the exact same thing right now. This is exactly what we saw earlier on in the year, with Bitcoin on this chart, and Bitcoin's doing the exact same thing again. Bitcoin's doing the exact same thing again right now in terms of getting that drop, the subsequent consolidation, and the subsequent pump, and that to me tells us absolutely everything about where this thing could be going in terms of the risk of a deviation. Is this a deviation? It really helps us answer questions like that. Now, I'm not necessarily saying that that's what this is, but if Bitcoin is literally following in those exact same characteristics and those exact same footsteps, then it's definitely something to keep an eye out for. The other thing I'm looking for is when you get rejected, you're typically going to get rejected quickly, right? A phenomenal example is the support hits that we had and how they got weaker. If we take a look at this support hit here, or this support hit here, or this support hit here, what you'll see with these first three examples is that when we come down to grab support, we're not hanging around at the low. We're moving up very quickly. It's the same thing when we initially came up to this range in the $64,000 area. We got a sharp, quick rejection and the price came right back down, right? When you're hanging around a little bit, that's showing you that in this case, it did end up resulting in a drop anyway, but it is showing you that you're going to be able to potentially break that resistance. Take a look at this. We started to hit the resistance up here at 67K, but we just hung out around here and we tried it again, and then we tried it again, and then we tried it again. This is how you know that actually we're not responding to resistance particularly well, so the breakout could be coming, right? When you're getting these sharp corrections, when you're getting these sharp moves where you don't actually hang around these levels for long, that tells you that actually this is a real rejection in the market here, whether you're getting rejected off support or you're getting rejected off resistance. Right now, we're not really seeing that, right? We're on the 4-hour time frame. We're halfway into this candle. You're going to see more of a resolution on this when you watch this video, but we've seen the price just kind of hit this area and hang out for a little bit, which is an indication that things could end up rising a little bit higher. Now, it's not something that makes me particularly worried about Bitcoin recovering back up, because there's still a lot of resistance up ahead for Bitcoin if it manages to get above this range, right? One of the things I would want to draw your attention to are some of these spikes that we're seeing on the VPVR, because they are not to be ignored, in my opinion. I mean, here's a couple of them that are very local to Bitcoin's price right now. And if we just remove the VPVR again, just so it's not particularly confusing, we've got two very important levels on this chart that could serve as resistance for Bitcoin. One of them right here at about $63,000, which is only $1,000 higher than where we topped out, and the next one up at about 64K. Now, if we're able to break both of these levels, more importantly, if we're able to get above this high right here, because this was the most recent high in the market, then I think we're back to being bullish. But anything lower than this high right here that we punched in at 64.7, anything lower than this on this chart, to me, we're still in very bearish territory, where this is just a back test after we've already broken market structure. We're coming back up to grab liquidity and then continuing to move down. We can actually see that because of all of the liquidations that have happened. On the move down, there were a lot of liquidations. On the move up, there were a lot of liquidations. I'm not going to go into that on this particular video, but if you're interested in checking things like that out, you can use all sorts of different websites like Coinalyze and whatever, whatever you prefer to help you analyze those things, and you'll see the same things being pointed to as well, which I think really tells you a lot about how this market has been responding to this price action, and the fact that this has actually served the purpose of just flushing out some liquidity in the market, people panic selling their crypto a little bit, and in this case also panic buying it back, now that we're back up into key resistance areas. And this is ultimately my point. For Bitcoin to start being bullish again, we need to eliminate the risk of this being a back test, right? And it already looks like it could be a deviation. We know that Bitcoin prints deviations all the time, so that's definitely on your side if you're bullish here. But not breaking this high, as long as we're not above this high, to me, it still just means that we're coming back up to grab resistance, right? And so I would want to be very cautious of that, because the S&P 500 has more space to rise up as well. The S&P 500 can get, a couple percentage points higher from here, 1 percentage point higher from here, until it reaches its next zone of resistance. And this is a pretty important zone of resistance for the S&P 500. It didn't print any significant resistance from its breakout point in January up until its all-time high in March, other than this resistance right here at 51.80, right? This was an important level for the market, for the index here, and we're approaching that level pretty quickly. On the flip side, the dollar has entered free fall right here. It's fallen down very far, but it's at support right now, and again, it's this age-old question of, are you going to get bearish at support and bullish at resistance, or are you going to do it properly and understand that resistance is actually where the drops start to happen, support is actually where the bounces start to happen? And if you take a look at where the dollar is now, this is a zone that the dollar has bounced off historically fairly reliably, right? When we're coming back down from this kind of price range, when the dollar hits this red line, which is basically where we are right now, the dollar does tend to get bounces. We can see this going back quite far. This is definitely an important level, for the dollar, where reversals tend to happen. And, I'm not saying that definitely means we're going to get a reversal here and the dollar is going to keep moving up. But again, are you going to be the guy that gets bearish at support and bullish at resistance? And if you are, you're probably doing it in reverse, right? Even if this does turn out to be a deviation and Bitcoin climbs back up into this range, you'd still be serving yourself very badly if you get very bullish right at the fucking bottom where the resistance is. For me, I want to get bullish when the market has proven that we've managed to clear important levels, and the market has proven that the risk of capturing resistance is gone, right? If we manage to get above 64.7 and then we come back down, I'm okay with that, because that basically just means we're back in the range, we're capturing support, and we're going to be able to continue moving up. But again, until that happens, this is just one fat block of resistance when Bitcoin has already proven itself to be in a downtrend. Now, one of the best things I think Bitcoin has going in its favor right now is the daily Ichimoku cloud. It's got phenomenal support off this cloud. It's bounced off the very bottom and it's now at the very top of the cloud. This is good. However, this is enough to fulfill the Ichimoku cloud, in my opinion, and we're now set to no longer use it if the market wanted to be bearish again, right? We got the bounce. We got the bounce that we were expecting. We got the bounce off the top line. We got the bounce off the bottom line. The Ichimoku cloud has served its course. That doesn't mean that we can't keep on moving up now, but it does mean that if we do start dumping, we're still seeing a very valid Ichimoku cloud here. It would be more unusual if we dump straight through the Ichimoku cloud, right? We're not doing that now. If things do start to reverse and rightfully at resistance level again, that's what you'd expect, then the Ichimoku cloud has already served its purpose here, and what we have instead now is daily EMA resistance, which is continuing to come down and flip bearish, right? We're still a little bit far away from it, but this is going to be that key level to break, because if we are able to get above that daily EMA ribbon, then, you know, we're back bullish on all sorts of time frames, and that's absolutely phenomenal. But until and unless that happens, this could start serving as resistance. The good news for the bulls is that we had this same EMA ribbon on the 4-hour as resistance, and it did not reject Bitcoin here. Bitcoin just flew straight through it, and it didn't really care, and now it's actually stabilizing above the EMA ribbon here. So that is a very strong sign for the market. Flip side, 4-hour Ichimoku cloud, if we do end up trading sideways here, literally just for the next 2-3 days, which is over the weekend, which, would make a lot of sense, right? If the S&P 500 doesn't really do anything big over these next couple of hours until it stops trading, which is in 2 hours, then we've got a weekend of price action for Bitcoin that we've got to sit through. And that's exactly where we could start to encounter a little bit of resistance here coming into that Monday session before the S&P 500 opens again. So I think that's going to be an important level, which is also very much important, and well worth watching in this market here. Definitely something that I would want to be paying attention to at this stage in the market as well. I really think this is where a lot of opportunities are starting to show themselves and present themselves here. I feel like this is where, you're looking at a situation where you've got a lot of good things shaping up in the market. You have got this back test coming in the market, which is, again, exactly what you want. And the deeper we go, the better if this does end up getting rejected. And then naturally, if it does end up falling down, I'm still looking at the 52K area. I honestly think that one of the most important things to do right now is just judge sentiment. We don't have updated metrics yet, so this isn't particularly easy to do. But yesterday, we saw a reading of 43. Today, at the beginning of today, we had a reading of 48. If we can start to see this fear and greed index continue to reset down to lower levels, we're going to find ourselves in a very good place. The last time we saw readings like what we had yesterday was in October of 2023, and the price was completely different back then. In October of 2023, we were way down here at like $27,000, okay? We were in a very, very different place. The more we start to see sentiment reset in this exact way, the more we're going to be looking at a healthier environment in this market to continue that rise up, to continue to pull out into better price ranges, right? So I would absolutely love to see that, and I'm not worried about where the fear and greed index is now. I don't feel like it's too low now for the market to continue to drop. So if we start to see that in 6 hours we pick up by a lot, and if we start to see, comment sections, even, and I hate to say it, but even on videos like this one right now, comment sections on other YouTube channels, comment sections on Twitter, and just Twitter sentiment and stuff like that, these to me are actually very reliable things to look at, where if you start seeing that a certain group of people, be it bulls or bears, if you start seeing that they're very cocky, and you'll notice it because the dumb people on this channel, and unfortunately there are a few, the dumb people on this channel haven't watched this video 18 minutes through. They haven't made it this far. If you look in the comment section of this video, and more importantly of others where you've got an even lower IQ audience, you're going to start to see that in bearish situations where the market is actually in trouble, it will precisely be at resistance levels where bulls become the most cocky. It's going to be the we're so back mentality. It's going to be the mentality of, we're back up to 60K legends. Let's get this party restarted. Let's invite all the models back in, turn the lights back on, get the music switched back on. You know what I mean? It's going to be like that kind of energy. But the reality, and this is what I always look for, is like, is there a disparity here between the energy that people are showing in the market and the price being at resistance, right? And if that disparity is very large, then I'm fucking very, very happy. I'm very, very happy to be on the opposite side over here. Also, of course, reminding myself very happily that 90% of traders lose money. So if you really start to feel like you're agreeing with everybody that you speak to about the market, you got to start asking yourself, are you talking to the elite 10%, or are you more likely to be, just talking to people who lose money in the market? And more often than not, it's the latter, which is why I don't think it's a good idea to discuss market ideas with anybody. And I generally don't. I don't actually discuss what I'm seeing in the market with anybody at all, other than the people in my own team. And to me, that's a very, very important distinction here. So, that's something I'm going to be watching out for. I've already been looking at Twitter, by the way, to help answer this question, and maybe I can show you some of this right now. I have seen that there has been a lot of like celebratory energy on the timeline in the recent hours. We've got, and I don't know what it's been like in the last like hour or so, but we've definitely seen a lot of people very happy with the market. I mean, here's a 31x long screenshot on Ethereum. I mean, this is not necessarily like overly bullish, but there is a lot of sentiment like this, which I think this is brilliant, which I think is important. What's Duck saying here? Let's see what he's saying. Range with lower highs. Shit momentum, bearish price action, bullish consolidation. Range breaks down, it's over. This was tweeted a couple of days ago. I think market looks much better than it did a week ago. Still looks shit, but at least a good chunk of the bearish impulse is out of the way now. So Duck feels like the bearish move could be exhausting itself. I think that's an accurate way to say what he has basically written there. There's not a whole lot more that I can show you guys right now, but feel free to scroll through it. Obviously, you guys can check out the link to my Twitter in the description and just see like who I follow. You're very, very welcome to check that stuff out and, see if you're interested in that kind of thing yourself. But I think that could be potentially quite useful. To just kind of gauge sentiment, right? If you, again, and for me, what I'm looking for ultimately, and I do the same thing when I'm looking to be bullish, right? If I see that we're falling down to support and we're literally at a support level, but fucking everybody and their grandmother is bearish and talking about, the market is over and making jokes about McDonald's and stuff like that, that's going to be my sign that actually, we could be looking at a very nice setup for the market to continue to rise up and actually, use support for what it is, which is support. So, that's something I'd be looking out for. Ladies and gents, I'm going to have to wrap it up for this one, though. If you have enjoyed this, make sure that you do smash those likes up and subscribe to the channel if you haven't done so already. Tick the bell icon, which is going to show up next to it as well, so that you don't miss out on this content. It will notify you straight to your phone when this time-sensitive content comes out. If you want to take advantage of the phenomenal offers available to you with the links in the description down below, all you've got to do is start trading using my links, and on Bybit, you will get up to 30k in free trading capital, and on BingX, without even doing any KYC, that means no pictures of yourself or your ID, you are going to get over $100,000 in bonuses as well, which is absolutely sick. Access to traditional finance markets as well. Very, very strong exchange here. Well worth taking a look at. I really hope you have enjoyed this one, ladies and gents. If you have, you know what to do, and I'll see you all in the next one. Cheers.